All right, it's time now for Hot Picks, where an investing professional picks their top 3 highest conviction ideas. Today, we're focused on the gold space. Let's talk to David McAlvany, CEO of McAlvany Financial. Thanks so much for joining us, David. Gold's got the hot hand right now. A lot of those gold bugs perhaps waking up from a bit of a slumber over the past year. Before we get to some of your picks, just talk about how you're thinking about the recent gold rally and how you're screening for opportunities.
Yeah, so on the demand side, you have central banks, you have investors, and then you've got sort of the industrial uses and jewelry and whatnot. The swing vote in the gold market is the investor, and that's been pretty fickle. If you look at Asia and Europe, you've certainly seen strong demand. In the West, not so much. So I think 2023 is really a story of the Western investor coming back into the gold market, following what the central banks were doing very aggressively throughout 2022. So I think the demand fundamentals are strong. We do expect a little bit of weakness in here over the next month or two. But if you look at the full year 2023, very constructive in terms of the gold story. And that leaves some of the gold stocks, I think, fairly undervalued.
You're talking about the demand side, but I'm thinking about a Barrick Gold yesterday, which announced very disappointing production, and production has consistently been falling. Is this a story that is perhaps undertold, that on the gold side of things, production is just not there? It's not growing. If anything, it's falling.
I think that's a fair point. This is one of the importance of finding the right management. Clearly, the large finds of yesteryear, 5 million and more, these are harder and harder to come by. So you've got large companies like Barrick having a difficulty replacing reserves. They don't want to pay too much for an asset. And yet that's historically what the sector has done, is overpay at the wrong time. So again, what's the steady hand of management doing within a particular company? I think, look, it's a hard business. It's a very hard business. And so you're going to see some lumpiness even with the best of companies. But I think you can set yourself in a better position as an investor by looking at the historical track record of a given management team.
All right, so let's talk about one that you do like right now. It's Agnico Eagle. What boxes is this ticking for you?
Well, I mean, from the standpoint of geography, it's got great geography. And in a world of growing resource nationalism, I think this is something that you've got to be mindful of on the risk side of the equation. In terms of the reward side of the equation, it's a group that's paid dividends for decades. So they're doing something right. You're talking about a very cyclical business, very difficult to manage through. And I think there's probably no better management in this sector than the group at Agnico. So, you go from a single mine, LaRonde, decades ago, to now having some of the best properties in Canada. And I think they've done very good jobs at choosing good properties and not overpaying for them. So that's probably my highest conviction pick going into 2023, Agnico Eagle.
And you like the acquisition of Yamana?
I do. I think it was a smart acquisition. I think they pick up some really good assets, consolidate Canadian Malartic, and they are in a position to be the number one miner in Canada and potentially top 2, top 3 in the world, but they're not growing in a crazy way. A lot of times you get a finance guy in there, and it's the story of leveraging up to buy assets, and it looks good on paper, but the reality is, again, this is a cyclical business. It's a hard business. There's surprises. I mean, I remember back when LaRonde had its rock blast. Maybe this was 2009, cut production nearly in half. These things happen, and you can't control nature in that respect. But you can control the variables going into the deals done, and I think it was constructive, allowing Pan American to take on a certain number of the projects that are more suitable to their portfolio. And so, yeah, I think it was win-win for Agnico and Pan American.
Oh, the other stock that you like is Alamos Gold, and this one has just taken off like a rocket recently. What's been driving that rally, and do you feel like an investor who hasn't been part of it is late to the story?
Yeah, I mean, clearly it's nearly fully priced. It's a few percentage points below net asset value. But you're not going to pick it up on a deal anymore as an investor. I think it's a company worth owning. It's one of the few companies that has the ability in a short period of time to double their production. And I think that's really what the investment community is finally glommed onto and figured out is that they do have some really good assets. Young-Davidson Island, and a whole host of other assets, which again have a production profile which is healthy today, and in a short period of time can double. So they've done a good job containing costs, and with that growth profile, it certainly makes the short list of picks for 2023.
What about geographic stability? Obviously a presence in the U.S. and I think Canada, but Mexico and Turkey, is that a stable situation, do you think?
Yeah, I mean, it's not ideal, but if you look at their aggregate production, I still think the majority of their assets and where they're generating revenue is from stable environments. Yeah, it's not ideal. I mean, I really am favorable towards North America, Canada, and the U.S. And you get very far afield and you find very sticky fingers. So that could certainly change in North America, but I don't think so. Not anytime soon.
And lastly, before I let you go, I got to get your last one in here. Osisko Gold royalties. These are streamers that just take a cut.
Yeah, I think this is probably the steepest discount to net asset value. Recently, our team put it at about a 59% discount to net asset value. So attractive from a price standpoint, does not run away. And, if you're going to put together a portfolio of gold companies, which I highly recommend, having one that has a little bit of inflation protection is smart. So the difference between the royalty companies and the producers is they're not dealing with the rising cost of crude and labor. Their investment profiles are completely different. The business structure is different. So they benefit from an increase in gold prices and improved production with the companies that they've helped finance. On the other hand, they don't have that risk of inflation eating away and bumping up the all-in sustainable costs. So that's one of the things I think I like about that particular company. I mean, you can look at other groups who are best in class, Franco-Nevada as an example, but it trades at a significant premium. And so at this juncture, if I was adding money to the space, I think Osisko Gold royalties trading at a discount, almost 60%. To net asset value versus a premium in Franco, it's an easy decision for me. And then sort of on weakness, maybe you look at companies like Franco and a few of the other streamers.